Welcome back everyone to Financial Shenanigan, and today we're going to have fun because I'm going to be revealing my top 10 best performing stock since I started trading on M1 Finance almost 2 years ago. If you're new to my channel, welcome. My name is Daniel. This channel is where I document my investing journey as openly as possible by showing you guys all the numbers, because whether it's a green day or a red day doesn't really matter. You're going to see everything. And right now, my portfolio is at $28,433.78. Compared to my last video, total is currently down $530.49. Like I mentioned, the brokerage that I use for all my investing right now is M1 Finance. And if you want to get a good return on your money, if you use the link in my description below, you're going to get $30 totally free when you deposit $100. That's an instant return of 30% for just a few minutes of work. So make sure you sign up today so you can get a better ROI than what I'm getting from my Costco position. And while you're at it, let's all make sure to subscribe so you can stay up to date on my portfolio. But with all that said and out the way, let's get started with my number 10 on the list. And up 16.35%, we have Airbnb. And the great thing is I've only invested in Airbnb for more than a month. And to see this kind of return already is pretty nice. And I rarely buy into IPOs because they normally shoot up because of pent-up demands. But I just had to get into Airbnb because of its massive growth potential. Because unlike other hotel companies like Marriott or Hilton, Airbnb, it has a unique advantage in that it has none of the cost of actually running a hotel. And just like how Uber just facilitates connections between drivers and passengers, Airbnb does the same because it's the mediator that links homeowners with travelers, and they just simply collect the fees from both parties. And this is a beautiful business model that maximizes profit for Airbnb while reducing the expense that normal hotel companies have to deal with. And with the Biden administration now looking to raise the federal minimum wage to $15, you know that the labor costs in hotels are going to go up substantially. And yes, even though right now the pandemic is weighing heavily on Airbnb's business, we all know that once people are able to travel again, that revenue is going to return. And there's another benefit to this whole pandemic is that people are going to be desperate to find ways to make more money. Because look at this search term trend for side hustle. Millions are currently unemployed, and those who are still working, they are realizing that their job security can be taken away in an instant. And the easiest side hustle for all of us to start, if you have a car, you can always Uber and Instacart. And if you have an extra bedroom or a garage they can convert, you can easily rent it out on Airbnb. As a result, I expect Airbnb to become a dominant player in the tourism industry as a whole, and I wouldn't be surprised if the Airbnb position, it jumps to my top 5 by the end of the year, but we'll see how it goes. Next on the list, we have the parent company of Google, Alphabet, in 9th place, up 16.65%. And we all know Google, you're watching this on YouTube right now, and if you look on this Alexa list, the top 2 most visited websites are currently Google and YouTube, which basically means there's more eyeballs on these two websites. And so companies are going to choose Google and YouTube to advertise, which is going to lead to more ad dollars flowing in and more upsides and more revenues for this amazing stock that I'm going to be holding. And moving on, I already made a dedicated video to my next best performer, so definitely check it out. But coming in at number 8, we have TJX Companies with a gain of 16.77%. And this discount retailer, it has a very strong business model that performs well in either good times and bad economic times as well. And even though consumer spending as a whole is down thanks to the pandemic, people are still going to want to shop, and their brands of TJ Maxx, Marshalls, and Home Goods, they're going to be benefiting because they're offering great value. In addition, TJX Companies are finally taking e-commerce more seriously, and this is going to pay dividend as they build out their online infrastructure. And the plus side to all this is TJX Company is also a recent purchase of mine, and I'm happy to see that I'm already getting this kind of gain in just 2 months' time. In the 7th place, we have the hottest car company in the world, and no, I'm not talking about Tesla. I'm talking about the car that every rich kid on Instagram drives, Ferrari, which comes in with an unrealized gain of 17.60%. And say what you will about their disastrous 2020 Formula season, but Ferrari is still the go-to brand that people think about when they picture a luxury sports car. And it is this image that makes it different from other companies like Toyota and other basic brands that compete on quantity. Ferrari, they focus on limited numbers of highly desirable and beautiful cars. But make no mistakes, Ferrari is continuing to grow, having sold a record 10,131 cars back in 2019, and they're also going to be releasing their own SUV. And even though Ferrari, they say that they're never going to become a fully electric brand, it's still embracing the future, and it also has plans to release several EV variation of future models. So it's definitely going to be a company that I'm going to be invested in the long term. Now, we're going to move on to some bigger movers with our number 6, Boeing, which is currently up 37.40%. Now check this out. Let's compare my gains to what Boeing's actual 1-year chart is. And the 1-year chart is currently down 34.80%. Now, this difference between my gains and what the Boeing chart is showing, this is the reason why I always dollar cost average into a position, and this is the result that you get when you keep on buying consistently into companies that you believe in. And we all remember the 737 MAX disasters. But despite all this controversies and everything, Boeing still has a very strong future as a national defense contractor and also one of 2 jet airline manufacturers. So this is why I'm going to just keep on buying the dip and buy on any weaknesses that Boeing has. But the good news for Boeing, Canada has joined other countries in bringing the 737 MAX back into service. So yeah, overall, the outlook for Boeing is improving, so we'll see how it pans out. And in the number 5th position, we have the world's most valuable company, which is Apple, with an impressive gain of 37.56%. I also did an in-depth analysis video on Apple, so make sure you check that out. But all the bullish reasons that I have for Apple has to do with their 5G cycle refresh and the tighter control that they're going to have now that they're releasing their own M1 chip, and lots of upcoming products like their recently released headphones and the rumored Apple Car. Overall, I expect strong growth from Apple for many years to come because they are the leading consumer brand. And even though I don't really care about it as much, Apple also pays a dividend, which is a nice bonus. Coming in at number 4 position, we have a company that has both been negatively and positively affected by the pandemic. I'm of course talking about Disney, which is currently up 40.93%. And even though their core business of theme parks, cruise lines, and blockbuster movie releases have been devastated, Disney saw a massive success with their rollout of Disney Plus. And a little bit of background, Disney executives, they were hoping for 75 million subscribers by 2024, but because of this pandemic and because of their fantastic shows like The Mandalorian, the Disney Plus, it passed 86 million subscribers in little over 1 year. Now this is really impressive because it took several years for Netflix to hit the same milestone. Of course, even though we don't know when the pandemic is going to end and life to return back to normal, we all know that people are going to go out to see movies, people are going to go to theme parks, and people are going to go on cruises. So once life returns to normal, Disney's going to go back to being a beast of a stock because they now have their physical locations bringing in money, and now they have this online subscription Disney Plus bundle along with Hulu and ESPN that they're going to be pushing, which is going to be providing reliable cash flow that they're going to be able to reinvest back into, more original content, or they're going to be able to fund further acquisitions, or at the very least pay out higher dividends as well. And moving on, we've now come to my top 3 best performing stocks. And in 3rd place, we have PayPal with a gain of 51.51%. It's not at all surprising that PayPal is doing so well in this pandemic because a lot more people are buying more things online. And this trend and this shift into e-commerce is going to be growing exponentially thanks to the pandemic. On the side note, I also own MasterCard and Visa, but because they get most of their benefits from travels and physical locations, once the economy opens back up and gets back to normal, these 3 payment stocks that I own, they're going to play well against each other and provide me with massive gains as well. In the 2nd place of my top best performing stock, we have Uber with an absolutely massive gain of 92.32%. And Uber is similar to Disney because their core business is basically devastated because of the pandemic. But thankfully, Uber has Uber Eats that's bringing in the money right now. And when we compare Uber Eats to DoorDash, which is the number 1 food delivery app, they have a 45% presence in the food delivery space. Uber, they recently acquired Postmates, and combined they come in at 2nd place with 37% of the delivery market. Now this brings up an interesting point because DoorDash by itself, they just do food delivery. They have a market cap of $59.5 billion, while Uber as a whole with their rideshare business and Uber Eats business, it comes in at $97.9 billion. Meaning if you just consider the DoorDash's valuation and you calculate Uber Eats valuation, Uber Eats comes in at $48.9 billion. So if you take that metrics, it's easy to see that Uber is currently undervalued. Investors are now catching up, and that's why you saw a massive rise in Uber share price recently. And overall, I'm going to keep on holding Uber because I anticipate more growth to happen. And once again, as the economy opens back up and people start using Ubers again, revenues are going to be coming in, which is going to push the stock price way, way higher. And with all that said, we've done with number 2. We're finally here. My number 1 best performing stock in my entire portfolio. If you already saw my previous video, you already know which stock I'm going to be talking about. And it's no surprise, Tesla comes in at number 1 with 158.72% in unrealized gains. And yeah, 158% is not really as impressive compared to other YouTubers who are up more than 1,000% on their Tesla position. But I just take that as the reality of, investing. That sometimes the same stock that you hold is going to perform differently and it's going to have a return ROI based on when you bought it at and how much you bought it at. Because don't forget, there's also a possibility that Tesla could have easily gone bankrupt as well. So once again, I keep on repeating this, know your risk tolerance. And honestly, 158%, I'm not complaining. I'm very happy with how my stock portfolio has performed so far. So there you have it. Those are my top 10 best performing stocks all laid out. And I'm thinking of making this maybe an annual video to see how the list changes over time. So let me know down below if that's something that you'd be interested in seeing as well. And while you're at it, don't forget to like and subscribe for more future videos. And make sure to get your 30% guaranteed return by using my M1 Finance link below to get $30 totally free by depositing $100. But I think I'm going to end it right here because it's almost 1 o'clock and I'm tired. So thank you so much for stopping by and listening. If you made it this far, I hope you have a great day. Happy investing. I'll be back next video with more shenanigans.